Let's take a look at the highlights for the cash portion. The operating cash flow less capex, which is equivalent to the free cash flow, is 1.3 billion in quarter 3. Net debt and finance lease repayments of 1.5 billion in quarter 3, and in total 164 million in decrease in cash and cash equivalents in quarter 3 to 16.1 billion. Now let's put it against the financial summary. For Lao Beng, one of the most important aspects for intrinsic value calculation is net cash provided by operating activities. Now, because you want activities that will generate a lot of cash and the growth rate as compared against last year same quarter or the last quarter, which is Q2, because for certain companies seasons play a part. Like example, Christmas season, probably the toys will sell more. Now financial year end plays a big part also because certain companies, the business units will want to expand their allocated budget, which probably may mean more business for certain companies. Now cash and cash equivalent is another important aspect that in my books has direct impact on the intrinsic value, as it includes the ability to obtain cash and items that can be exchanged for cash under reasonable circumstances. Now take note of the net cash, which compared against Q3 2020, it's slightly above 4% increase or improvement. Still considered good, but is it good enough for growth type of stock? We can clearly see that the number of vehicles produced and delivered have been on a steady rise, which brings 2 points. Is the order increasing but growth is hit due to chip shortage, or is the chip shortage problem easing? Now Tesla mentioned in their latest quarter results that in Q3 they see a continuation of global supply chain, transportation, and other manufacturing challenges. They continue to run their production lines as close to full cap as conditions allow, but the magnitude of growth will be largely determined by outside factors. People want to buy a Tesla, but they are not able to increase production capacity fast enough. Just based on the annual installed capacity of Tesla's current factories, it would make more sense that the factory output isn't good enough. But good news is that Berlin and Texas factories are in construction, which I understand that both factories are scheduled to start first production end of 2021. This also means a big problem because we will only see meaningful changes to the number of deliveries and production earliest quarter 2 of 2022. Room for growth is huge, and we will have to see how Tesla continues to beat its electric vehicle and traditional cars competition. Now, outlook is very good, but within expectations, and due to its nature of being a high-valued growth stock, the ability to grow at exponential rate is required to sustain the company's high valuation by the market. The guidance provided by Tesla is 50% average annual growth in vehicle deliveries. This greatly affects and impact the intrinsic value calculation, which I will cover at the final part of the video. Cash and profit will continue to grow to reach industry leading levels. This will also means that the growth will taper. Now, the next big Tesla news that could possibly move the share price violently will be the Cybertruck, which hasn't unveiled substantial or critical information yet. So I'm using two intrinsic value calculators to do this, and we can see that for the first calculator that I used, the operating cash flow is calculated to be 9.2 billion. How I got it is using the first 3 quarter operating cash flow, and I multiply it, increase it by 25%. Now, then the total debt is 2.1 billion, and I understand that the cash and cash equivalent is about 16.229 billion. Now, I'm using the growth rate that they have mentioned, so being generously using 50% growth rate for the next 10 years and the number of outstanding shares at 1.12 billion. The final intrinsic value that I got is $683 per share. Now, using the next intrinsic calculator, I've keyed in the figures of using 1.86 per quarter earnings per share for a year. And after that, I have done a calculation which also ends up with about $650 per share. This is the current value based on my two intrinsic value calculators. Let's do a comparison against the current stock and chart. Okay, so now I'm using this platform. All right, this is the daily chart for 6 months for Tesla. The current price right now, of course, is $865. This is much higher against what my valuation is. Okay, now based on technical evaluation or analysis, okay, this is just this broke up above the Bollinger Band, but on the second day where it goes above the Bollinger Band, there's a big red bar down, and it went inside the Bollinger Band already. And if I were to buy, I would short it instead of buying up, not for the time being, okay? And against my valuation, so even if I do not short the stock, I would just wait for it to come down to several MAs first. Now, based on my valuation, it's actually about 150 MAs which is about $689. Yeah, that's about near close to my valuation, or even MA 250, which is $677. So probably this is the correct valuation under my valuation. But of course, it could go higher depending on what the upcoming months, based on the, like I mentioned earlier, Q2 2022, based on the new factories that's coming up, and of course the Tesla Cybertruck and several other businesses that they have, right? But based on now, and including this technical chart here, technical analysis here, I wouldn't buy in at this price. No way. Okay, so this is the end of my video, and I hope you all like it, and do subscribe if you find value in this. Thank you.